Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to today's pre-market prep. Spencer Israel, Joel Elconin. You know, we were joking last week when we said, "Oh, Dennis is going out of town. Things might get a little crazy." But that's exactly what's happened here, at least with regards to China, because every day is more pain in Chinese stocks. JP Morgan called them virtually uninvestable at this point. So we'll talk about that. We'll talk about Tesla earnings out last night. Reports seemed pretty good to my eyes and ears. We'll get Joel's thoughts on the chart. We'll go through some more earnings this morning as well. We had UPS, we had 3M, we had GE. We'll get through those. JC Parets will join us today for real at 8:35. He is from AllStarCharts.com. Excited to get JC's thoughts on these markets. And then at 9, I will be joined by Michael Loukas, Principal and CEO of TrueMark Investments. Joel, actually, before I throw it to Joel, reminder everyone, and the link is in the description, the very first pre-market prep a 3-hour education event. The link is in the description. It's on August. Where's my link? It's on
21st.
August 21st, 9 to noon Eastern time. Link in description. Check it out. Joel, good morning. We'll start with the overall markets as we always do.
Yeah, boy.
I feel like this is just going to be a repeat show of yesterday, quite frankly. It's the same exact
There's an overall market, and then there's our market. Just immune to where what is going on overseas. But real quick, S&Ps were traded down 6. We had a strong close. Found resistance right at the high from yesterday. Sold off to 43.90, and now we just helped. But tech stocks, we've just bounced right back, only down 650. Importance of that close of 14.25. That's your all-time closing high. As well as that high right there. So 8 points away from just absolutely no resistance. Crude just hanging in here at 72. Can't get that number out of my head. 3 days highs right here. Really important for the bulls to take this through 72.40, get it into the 73 handle. Gold just hanging out under 1,800. That's down 80 cents at 1798.40. Nothing special about gold. Silver down about a dime there at 25.22. Bitcoin, we did sniff the top of that range yesterday, but Amazon, the news is we've known all along that they're not doing it immediately. So Bitcoin's down $1,555 at $37,925. And Ethereum's down $101.50 at $2771.25. And earnings, China. Where do you want to go?
I just think it's a little bit interesting. So a year ago, China created this Hang Seng Tech Index, right? It was like their version of like the NASDAQ. Right, it was like or the Nasdaq 100. It was like China's technology index, and they launched it a year ago, literally 1 year ago today. And if I can, actually, I almost want to show you the chart. Let me bring it up on my screen right now. All-time low this morning, because of what we've been talking about. So this is the chart. This is a 1-year chart of the Hang Seng Technology Index. And it is at an all-time low today because you know why. It's the same story. It's a continued development. Every day you wake up and you look at these stocks, whether it's Baba or JD or any of the education names. Actually, a couple of the education names are a little bit of a buy the dip action. And when I say little, I mean little. But they just can't stop going down. Kathy Wood exited her 10 cent last week. She's been selling like crazy, and they owned a lot of China. They own JD, they own Baidu, they own Huya, they own a bunch. They are selling like crazy over there. I mean, I don't know what else to say about it because we talk about it like 3 days in a row now. But like every day, you're like, how much more can it fall? How much more can it fall? And it keeps on falling. So,
yeah, I mean, and it's not like it's just continuation move, right? It's not new news coming out.
Well, it is new news in the sense that like. So like yesterday the SEC came out and said, oh, all you companies, you have to warn, like all you companies listed in the US, you need to warn your investors, which doesn't really mean a lot. But it's just like it's the same story. It's just the ball's moving 1 yard at a time. So like every day there are new like micro developments, but it's the same overall story, which is China cracking down. They're dropping the hammer on a bunch of stuff. I mean, overnight they ordered Tencent Music to give up their exclusive music licensing, which is kind of like the point of the business, I think. Right?
What's this? That's a funky symbol.
No, it's TME is Tencent.
Okay,
Music.
TME.
Yeah,
okay.
But it's owned by Tencent, which trades OTC, which is TCEHY. But like,
yeah,
you're telling a music company that they have to give up their exclusive music licensing rights. That's like kind of the point, right, of the business in the first place. So it's things like that every single day, and it's like they
don't care. I mean, they're believe me, they're not looking at this for this. This is not a short-term move. This is a long-term move. I mean,
how do you come in with any sense of sanity or security, and how do you buy here? I understand like the reflex to be a hero and like buy the dip and buy when there's blood on the streets, but I mean, it can get if you think it can get worse, it can get worse.
Well, look what happened with BABA. I mean, BABA was the original one that they went after, right? And then they settled. They paid like a $2.4 billion fine.
Yeah. That's what I thought. I thought they were the ones that were going to be like relatively okay, but what do I know?
Down another 6 sticks. I would just say if you're in these things, and there's always going to be time to get back in it if things turn around. And it's had a big run, continuing to make new lows on the move. I mean, this move from 215 down. I mean, actually, this morning, once again, the overreaction, the 4 a.m. overreaction, you got under 184. I looked at this yesterday. The pre-market low here, like it really makes any difference, just coming lower tomorrow, is 182.11. And I had to go back a long ways. I saw 3 lows at 185. This is going way back, years back. So that's a technical level, but right now technicals really don't mean a whole heck of a lot. 215 lost 30 points in 3, while going into the 4th session here. So maybe just wait for a double bottom or something to lean on. It's my political science degree is not doing any dividends for me. Scarjo Rabbit, I don't think we're fearful. I think this is a really unique situation here where China is actually doing things that are hurting their own companies.
You know what this actually reminds me of in a way, and only in terms of like the market movement, it does remind me a little bit of last March, where you wake up and like every day the market was down, like noticeably down, not like 0.5% down, like 2 or 3% down every single morning you wake up, right? And then it only got worse throughout the morning into the open, and it was scary to be in the moment, right? So like I suppose like if someone had like a gun to my head and said you got to buy Chinese stocks, what do you do? You probably at least wait till it like starts to go sideways, right? At least. Like why be a hero? Why buy it on the way down, or just close your eyes, dollar cost average, and forget about it? But like again, why would you even do that? Is my point. It does remind me of last year in the sense of like every day you wake up and it's we're down again. We're down again. It's deja vu. We're down again. We're down again. Now, what ended up happening, as we now know, is the Fed stepped in and we had the snapback rally. But and I spent, the first 2 months of that rally being like, the pain isn't over. It has to keep going down, and that ended up being wrong. But I don't know. I mean, I don't know why would anybody want to hold these stocks right now when you don't know? Nobody knows what's going to happen here. This is new.
This is we've seen a lot of different scenarios in the markets, but this definitely is a new one. And I mean, until you start getting some positivity coming out of the Chinese government on this, then I mean, and the thing too is, if you go back at the BABA chart, and I always like to look at things where they were, like when the news events first happened, right? And this is when the Chinese regulators stepped in, and that created the big down day. I mean, you had a chance if you were like, okay, this is bad. I mean, it gave you plenty of chance to get out at that level. Now, it was still 60, 70 points away from the all-time highs. I don't know if people were willing to, to pull the trigger on the sell side. I mean, a lot of people now would like to see this thing back at 200, 215. So a lot of overhead supply building up. Once again, the pre-market low is just above 182. There were 3 lows at the 185 area. Now the low of yesterday's range, 190.88, is going to be resistance.
So, you ask yourself, okay, well, where's the rotation? Where's the money going? Well, every global index is higher in the last 5 days, except for China. Basically, every international index, every country index for every global market in Europe and Asia is higher in the last 5 days. So maybe the money is going into other international markets in Europe, in Japan, in India, because every one of those markets is higher going this week. I guess not all of them. I guess for the Philippines is down, Malaysia's down, but like let's say most global country-specific indexes are higher in the last 5 days. So maybe it rotates there. You can look at Latin America as well. Maybe it just comes to the U.S. Maybe this is a tailwind for U.S. stocks because the money's got to go.
Well, that's what it is.
Right?
It's a tailwind. I tell you what. I mean, I tell you where the money was going. We were looking for where the rotation is, and tech stocks. It's our time, it's the big tech stocks. Microsoft, Apple, right at the all-time high, going into earnings after the close here. You also have Microsoft trading at or near all-time high, right? You have Amazon has the earnings. That's moving up. Google at its all-time high. That's been on a tear. Facebook at an all-time high. So that it's sell China, buy U.S. tech stocks. I mean, that's clearly where the rotation's been, and who knows how long it's going to continue.
Christy Morris says it's going to Bitcoin.
All right. I mean,
maybe.
Unless you go to the top of the trading range. I mean, and that's what you had. Now, it was a really quick move to the top of the trading range. Didn't quite get to that 41,000. I think we gave you that as a 3-star yesterday. Got to 40,580. So you got the news yesterday. The best thing for Bitcoin, I know we're down a little bit today, would just to be hang in here. Consolidate for a few days, because it sure doesn't look like you got the 2-day move. It's just different when stocks have a run like this, and just basically no reference points, no retracements, nothing to look at, just churning higher. Once you come down and you got people caught, it's different. It's a different kind of rally, and that's what you're seeing. Ultimately, and I'm looking at Bitcoin here, is if this 2930K low is for sure, this is it. This is like your multi-year. Then we got to go up and test 48,000. And then take that out and go back up. So I still think there's room to the upside here, but right now the top of the trading range is top of the trading range.
Yeah. All right. Let's talk about Tesla here. Let's move on from all this and let's go to Tesla. If you listen to the call, which we streamed last night on our channel, it sounded mostly good. Elon was his usual self. In terms of, he definitely rambled a little bit. He also said he's not going to be on these calls going forward, unless he has something specific he wants to tell us. I think he just doesn't care, frankly. He doesn't like doing it, obviously. Doesn't really care. Anyway, as far as the numbers from Tesla, they were mostly good to me. They're, again, as is the case every quarter, there are things that the bulls are going to hang their hat on, and there are things that the bears are going to hang their hat on. So the bulls are going to hang their hat on the fact that they blew away the EPS, $1.45 versus 96 cents. They blew away the sales, just under $12 billion versus $11.2 billion estimate. We already knew deliveries was good. Big thing with Tesla has always been, well, are they profitable if you take away the sale of regulatory credits and now Bitcoin? Well, yes, they were profitable if you take away the sale of regulatory credits. Actually, last quarter, the revenue from the sale of regulatory credits went down 17% year over year, which goes to show it's taking up a smaller piece of the pie, and they're making more money from selling, actual cars that they make, not credits, which is what people have always wanted to see, and it seems like it's happening. Right, regulatory credits were at their lowest level in terms of revenue last quarter in like the last five quarters. Right, so they talked about that. The margins were better than people were expecting, so that's all good news. What are the bears going to hang their hat on? They're going to hang their hat on the fact that the Cybertruck seemingly delayed again. We don't have a clear timeline for production. We don't have a super specific timeline for production in Europe. We have vagarities like next year. And they'll hang their hat on the full self-driving, which is seemingly never going to happen. So the bears will hang their hat on that. The bulls will hang their hat on that. The fact that the numbers are pretty good.
Man, this chart. Sometimes I look at charts, and sometimes I got a good feeling. And this one is just. I mean, I don't want to go so wide on you guys, but like 620, right? And that would kind of had a low in that area on the way up. You failed at 700. Those levels are, they're eons away, and until it can break above 700 or break below 620, I mean, what kind of 3 up days and then a new high for the move, then 3 down days, and then 2 up. I mean, it's just such a yo-yo. You did get a sell on the immediate reaction to 678.35. You've leaked $15 off there. So it just doesn't feel like it's going to go back up there and take that out and go, 680 bid, 690 bid, go to 700. It's already peeled off $12 from there. So what's the top of yesterday's range? The top of yesterday's range is 668.20. So now we're below that. So I think you just have to use a reset. Okay, yesterday's high, that's resistance. Yesterday's low, that's support. It's going to wind in there. I guess the straddle sellers did okay because this thing is not moving. Just not moving like it's used to. So I'll give you the resistance at yesterday's high, 660 to 820. And, if you're looking for this thing, you want to pick it up perhaps on the cheap, I'd see if I could get that closing price, $57.62, which would be like an $18 discount from the pre-market high.
Yeah, and if you're wondering about Bitcoin, well, I mean, obviously they lost money on their Bitcoin last quarter, right?
They didn't buy any more?
I didn't see if they bought more, but they, their investment went down in value. Right? This is obvious.
It went down in value, and they still had a good quarter. I mean, A good quarter is a good quarter. I mean, you can't ignore that. And they're being rewarded tepidly so far. So
wait. Emily says she misses the way Tesla traded last year. What? When it went to 900? I mean, what's?
I mean, who doesn't miss that, Spencer?
When it went straight up every day? What do you mean?
Didn't the whole stock market go up?
Yeah. Everything
exactly
went up every day for the last 6 months of the year. It was a blast.
One thing that I would there's 2 things that I caught on the earnings. The semi truck is such an important thing. I mean, that was expected to come out this year. Pushing it back into 2022, I think is massively important because that was one of the massive drivers that I was speaking before yesterday's report as what could get them above that 700. So now that that's not there, that definitely puts like a brake on my like red light. And then the other thing is at least on the bullish side, they did mention that their Germany factories are still on schedule to get their vehicles out. I think that's probably the only kind of positive, at least on that catalyst side, that I would push. But man, those semi-truck, they're not coming out right now. I think that's a big deal because
it is, because that's what people are looking forward to. So you're right, and but again, and something else we didn't even talk about is the fact that we're still in the midst of a global chip shortage, and Elon talked about that and said it was serious. I think his words were it's quite serious. But the fact that Tesla was able to deliver the amount of cars they were on the margins that they had against that, I think a lot of people like that. Are very happy with Tesla's quarter. There's not a lot of reasons to be upset about Tesla's quarter. There are some reasons, as there always are, to be skeptical about Tesla's future. Right, delaying the truck is a big thing. But you can see overall the market likes it. I mean, even though we're down pretty much for the last last 2 hours, we've pretty much gone down. But the market, I think, like I said, I think it was a mostly good report. There are reasons not to like it if you're really looking for it, but there are reasons to like it.
Jimmy made a good point. And just since what's changed about Tesla in the last year is it's been added to the S&P 500 index, right? So it's also more of an arbitrage vehicle too.
Sure.
So in being included in baskets, being kept in line with the S&P, and that so the ARBs have come in, and I think that when I talk about Bitcoin, and it had the big day yesterday, but once you get the more arbitrage that you get involved in something, the less volatility there is, because they're just trying to keep it in line. So
sure.
I think that's a good point that Jimmy made. It's part of the index, and a lot more ARB going on with them. A lot more ARB than you have, just much more. I don't want to call it indiscriminate, but you have they're buying something else, and their correlation is to sell Tesla. So
I mean,
ARBs keep things in line.
Tesla is in terms of companies, it's the seventh largest component of the S&P 500. It's the eighth stock, right? Because there's two Google stocks.
Got it.
But if you count companies, it's number 7. The only companies that make up more of the S&P than Tesla are Apple, Microsoft, Amazon, Facebook, Google, and Berkshire.
All right, let's rip through these other earnings before we get to GC.
Okay,
there's a lot.
Let's go to UPS here this morning. No real surprise, right? I mean, they blew it away. Everyone's buying stuff, so it has to get shipped. EPS $3.06 versus a $2.81 estimate. Sales of 23.4 versus $23.24 billion. So a beat on the earnings per share, a beat on the sales, and how's the stock doing?
Trading down 486 at 205. We looked at this thing yesterday, and it's just like this 215. No exact numbers there, but you can see after coming off the high, after the dip into the 190 handle, 215 is rock. So that's 10 points away now. Sellers are going to have to step down now in order to sell this stock. I don't know if it's turned for good. Now you use yesterday's high, or yesterday's low as resistance, 209.35. And the first daily low that we come into, 205.93. We're below that. 202. I'll give you a level now. If you're looking for more on the downside, I like the lower 202 handle. I see 4 out of 5 lows. Right, let's just call it 202.50. That's only 250 away. So you had 4 or 5 lows in that area. Quiet after the report. How's FedEx trading? FedEx, that's trading down sympathy a little bit too. I mean, people are still online shopping, and I'll tell you, I had to go get a couple things. Was it yesterday? And I can't find anything at the store.
I don't know
anything that I wanted. It's like,
and the things you can find, frankly,
you don't want
are more expensive.
I just want to go and I'll go to the store and I want to get the exact same thing. I know exactly what I want. And like you're looking through the shelf. So I mean, it's here. Is it going to be the same same pace? I mean, unless we go into, a lockdown again, which, certainly doesn't look like we're heading that way. They stepped up, they have the traffic. People are now more accustomed to online shopping. They were moving that way anyways. So I mean, that's an unprecedented run that UPS had. So and FedEx. So I don't know how much more you can expect on this. They're not really, there's not a huge catalyst now, and seeing it down after earnings lets me think that the path of least resistance here is lower in both these stocks. Mitch, you got any thoughts on these?
Yeah, I would have to agree with you. I'm not going to go too in depth on it, but I definitely have to agree.
Wait, Greg Martin.
They're kind of on a turnaround.
Greg Martin says all his COVID mask trades are ripping. Greg, drop us.
What are the COVID mask trades?
Are you talking about like Lake? Like talking about? I'm just curious what you're talking about, Greg. Because Lake's
hanging out.
Okay, it's hanging. It's okay.
Yeah. What else? APT.
That was one I couldn't remember. APT. Right. How's that one?
Right. I mean, they're pausing.
Yeah.
And then what were the other one? Boy, it's so long.
Those are the two that I can think of. APT.
Codex. But
what's this? CODX?
Yeah, that one.
Oh yeah.
That doesn't. It just doesn't. The virus doesn't seem to focus. The focus seems to be, in China. I mean, right now.
Yeah. I mean, that's where the focus is, frankly. And it's not even like in China with regards to the virus. It's in China with regards to, oh my God, they're like tanking their own stock market right now. So, and one last thing on the Tesla before I forget, I saw this cool stat last night. The numbers last quarter were so good that they basically cut their multiple in half. They cut their PE multiple in half. That's how good the numbers were. So it just goes to show how price to earnings in a vacuum, isn't. You can't really look at that. The whole point of using ratios in the first place is to compare companies in similar businesses to each other. But just looking at one number by itself as it pertains to one company doesn't really tell the whole story. But if you're looking at the Tesla PE multiple, it's dramatically lower now than it was before they reported earnings. Okay, so we did UPS. Let's go to GE. They're also out this morning. Slow, stodgy stock, beat by a penny on the EPS, 5 cents versus 4 cents. Sales came in a smidge higher as well, $18.3 billion. They did raise their free cash flow outlook to $3.5 to $5 billion for the year. And where are we at in GE? We're higher.
We got a pop and then a drop. If you're using your daily charts to look at this, I mean, look, it stopped where it should have. Where did we get to? 1355. Man, this thing came down very hard off the 1360 level. I can't remember what it was. Another high this area. So 1354, 1363. Where'd you get to in the pre-market? Boom. You got to 1355. You're still hanging at 1328, so that's not too bad, but there's got to be a boatload of paper here at 1350. So if you get up to that area again, 1350, 1360, keep your eye on New York book. Big sellers there. Could be very well could be big sellers during the regular session. Another high here, just over 1360. Ton of resistance coming down on support. Also, folks, this has been a big move. We hit 1182 last Monday. So on a percentage basis, it's absolute huge move in GE.
Yeah.
If you're looking for support in this thing, wow, top of yesterday's range, 1294. S&P's coming in a little bit here. June durable goods out. Doesn't look like the market's too thrilled with that. 0.8 versus 2.0. So durable goods. Not as expected. S&P's leaking here a little bit, down 11.
I think on GE, so we just basically went from $5 in May to last May. To $14 in March. So you basically you almost tripled in 10 months. Moves like that in GE don't happen. So
No,
maybe
big after hours move too. I don't know why he printed back down under 13. Oh, there was someone just whacked it there at 1292. Well, back at the gap area. That was quick. So what did they say? Are they doing the conference call this morning?
Probably.
Did someone just say something?
Probably.
I wonder if those are some bad prints from yesterday. They're throwing some prints up on tape.
Were they at 8:30? Yeah, the conference call should be mostly open.
Yeah, I think there were some bad ticks there. But all right, and then what about the tape company, Triple M?
Yeah, we can go to 3M here. EPS beat $2.59 versus a $2.26 estimate. Sales also beat 8.9 versus 8.55 billion. They raised their guidance for the year. The EPS guidance was raised. Really, just the low end was raised from the low $9 range to the high $9 range for their fiscal year EPS. So it was mostly good report. Stock's trading higher by like $1.
It is. It traded up nearly to 205. Just resistance forming. You did have some short-term resistance at 203.21. We are trading below that right now. I just see a lot of resistance here. I see all these highs here, and then I see all these highs above, just above 204. Is that how high did that get? Actually closer to 205. So a lot of resistance here. Did get the spike in the pre-market. I mean, you might get a look at this thing unchanged on the session. Let's see here. So let's call 201.67. Support just to fill the gap, and this lot of resistance over here. So I don't think I'd get real impressed unless this thing could, take out this 205, close above it, and then make another move higher. Had a big move off the March low, really hasn't been participating in the rally. Actually peaked in May while the market kept going. So not good report, not a great relative performance considering how strong this market's been.
Yeah. All right, 8:34. We will have JC Parets on in just about a minute. And yes, theater guy, 3M does make masks as well. They make all kinds of masks. They make paint masks. They make every kind of mask. So it is.
But what part of it is their business?
Well, yeah,
like how much
exactly.
They make a gajillion products, sure.
Very very small,
but it is. But you know what though? If we are gonna get, well, yeah, actually, let's talk about this for a second. So, like, if we are gonna get if we are gonna get another mask mandate, then is the mask trade a thing? I mean, I don't know about you guys, but like, I already have like a bunch of masks that I never used.
Just go to your store. They're on sale. They're on discounts right now. They're not selling for full price anymore.
I bought masks like at the peak last summer that I never even used. So like, how many people are like me who are like, does anybody really need to go buy more? I mean, we also have everyone's got reusable masks now. Does anybody need to really go buy more? Maybe they do. I don't know. But
I used the Lysol indicator. If there's Lysol on the walls, we're okay, guys. We're okay.
That's good. Yeah.
The Lysol indicator.
And toilet paper. Lysol and toilet paper. As long as those things are on the shelves.
It's a must.
The toilet paper was running a little low right now.
Don't be joking about that.
We're gonna have to go to reusables. We might have to pull a Neil, get ourselves a bidet.
Oh no, that's the last thing I needed to know. There's one on TP now. All right, let's get JC Parets on from AllStarCharts. Great follow on Twitter. And JC,
yeah, guys, check him out if you don't follow him.
Good morning, sir.
Good morning, gentlemen.
Oh man, I don't even know where to begin. Let's just start with what are you watching the closest right now in terms of the markets? What are you paying the most attention to?
What's up, Joel? How you doing,
hey,
man?
How you doing, buddy?
All right, long time. What am I watching in the market? I'm watching, I looked through a lot of charts this weekend, obviously, but the big conclusion this week was really more of the same. Some stocks are going up. Most stocks are not, right? And that's the big conclusion. And something I'd like to add to that is that most stocks are not going down either, right? They're not going up, but they're not going down. They're just churning sideways, right? That's the majority. Some stocks are making new lows, things like emerging markets, some of the bank stocks making new relative lows as well. And then very, very few stocks making new highs. But you have more stocks making new lows than you do new highs. So that shows you sort of what kind of market environment we're in and that we've been in.
I've been thinking about this. There's people complaining, hey, the indexes don't tell the story because the SPY's at all-time highs, but what you just said is also true, so the two don't really match up. Is this the new normal where the indexes are, at least the S&P, is so concentrated in like 5 or 6 stocks that it's never going to show what's really happening out there in terms of breadth? Is that, you think, like a new normal? We have to maybe,
I think it's important for investors to understand what they're analyzing, right? So when you talk about the market, like what is the market? Are we talking about the majority of stocks?
I'm asking you.
Also 3,000, right? What is that? If you are specifically talking about the NASDAQ 100, you're looking at an index of 100 companies these are just massive growth, techy, right? You have to know what that is. If you're talking about the Russell 3000, you're talking about approximately 98% of all investable assets in the U.S. equities market. If you're talking about the New York Stock Exchange Composite, over half of the stocks in that index, over half of the largest 100 stocks in that index aren't even in the United States. So you have to understand what's in that index. Same thing with the S&P 500, right? As you mentioned, 5 stocks are like 25% of the whole index or something like that. We have to understand what it is that we're analyzing when you broaden it out. If you want to look at the value line indexes, that's going to give you more of the median stock or the average stock, depending on which value line index you're looking at. That's going to give you a better gauge of the market, right? You look at mid caps, small caps, micro caps. Obviously, we look at all of the indexes and they all tell a different story because they're all made up of different types of stocks.
Yeah.
JC, there's always like turning points in the market, right? And over the years, you've been pretty good at nailing those turning points. And now, is it inflation or is there non-inflation? Is the economy slowing in growth? And that's why the bonds are rallying. China completely falling apart here. It just seems like what is your go-to indicator? Is it, if you're just keeping your blinkers on and you're looking at your big tech stocks, then everything's fine. Then, you can't argue with the trend. The trend is higher. These things are breaking out to new all-time highs. They have their earnings reports coming. So you're looking for a turning point. Is it going to be something in the dollar, which I don't follow as closely as you? Is it going to be something Jerome Powell is taking his stance? Are you still waiting for that something to like jump out onto the screen and hit you aside the head, or do you have that in your back pocket?
I think it depends on what it is that you're trying to do as an investor, right? So for me, it's important to, number one, identify what type of market environment we're in, and then choose which tools and strategies are best suited for that sort of environment. So for example, if you were last year, for the last 3 quarters of last year, if you were implementing mean reversion strategies and you were trying to sell tops as a mean reversion strategy, that was a terrible strategy in that environment.
Yeah.
In this environment, if you have not recognized, we're on month number 6 of this correction. The stock market peaked back in February. So if you're still in that trend following mentality and you think that we're in the type of environment that your trend following tools are going to work, you've been getting chopped up. And I know that for a fact because I talk to some of the best traders in the world every single day, and the majority of them have been getting chopped up since February.
Why do you say the market topped in February?
Well, the list of new highs peaked in February. The advanced decline lines peaked in February. Emerging markets peaked in February. Broker dealers on a relative basis peaked in February. That was the pinnacle of that first year thrust. And then ever since then, fewer and fewer stocks have been participating. So for example, the NASDAQ peaked in February, small caps, micro caps, all peaked in February. But then you had some of those cyclical areas like industrials, financials, materials, continue to make new highs into May. But those were the only ones still doing that. And then those ultimately rolled over in May when the Dow Industrials and the Dow Transports hit their peak. But in terms of the market of stocks, not just in the United States, but globally, that peak was in February.
So how long have you?
Number 6 of this correction.
Yeah. So in the research you've been doing, how long has the general market? How long is the indexes? The big indexes, the majority of the market continue to go higher after those indicators have peaked. I mean, right now, what are we going on? 6, 7 months? Have you seen this kind of divergence before in your research?
Yeah, for sure. You saw it in 2015, right? In 2015, the market peaked in the fourth quarter of 2014, but the S&P and the Dow kept making new highs into May of 2015. So this isn't anything new where you're going to see indexes that are driven by a group of stocks that are still working. In this case, the only group of stocks that are still working are the ones driving those particular indexes that are the ones that get the headlines, right? Because, if you're a headline news person, right, you're not in the business of telling your audience the truth. You're in the business of getting your audience to pay attention to what you have to say. So stock market makes all-time highs is a lot sexier than this one index makes all-time highs, but most stocks didn't, right? Like, that's just not, they're never going to write that because it's not in their best interest to do that, right? They're not in the business of telling people the truth. They're in the business of getting people to read or watch or whatever it is that they're doing. So I think that's perfectly normal. I would also add that this is classic behavior of year 2 of a cycle. So last year we had that initial thrust off the March lows, absolutely monster move in stocks, not just in the United States, but around the globe. And then what happens in year 2? Chop, chop, chop. We saw the same thing in 2009, major move off of those lows. What happened in 2010? Chop, chop, chop. Look at 2003 when the market bottomed then, monster year. What happened in 04? Chop, chop, chop. Saw the same thing in 1984, saw the same thing in 1976. All of these year 2s of cycles are just messy environments. So I've been arguing most of the year, and still am, that if the market wasn't a mess, if the market wasn't doing this, then that would be unusual. But the fact that the market's a hot mess is perfectly consistent with all the other periods that are just like this in the past.
So how are you positioned for all this right now?
Well, we've been in heavy cash since March because in hindsight, I could tell you the market peaked in February.
Wow.
But in February, we didn't know the market was peaking, obviously, right? That's just what it is. But in March, when the NASDAQ broke below those February highs, small caps and micro caps also did, and we started to see the divergences. By mid-March, it's like, okay, this market's a mess. And the question is, how long is it going to be a mess? And the bet was probably messier for longer is the pain trade, and that's exactly what it's been, just a hot mess. And I don't see any signs of that slowing down. It's probably going to continue to be a mess. And what's wrong with heavy cash positions? What's wrong with positioning yourself to take advantage of people getting chopped up? Every time we sell premium, we collect that cash instantly because traders have convinced themselves that we're still in a trending environment. So they pretend that we are and they act accordingly. And all they're doing is donating that money to the market, particularly the options premium collectors, which is why that strategy has worked so well in a messy environment. Last year, that strategy would have been terrible, right? So I think it's really, really important for any investor to, number one, before doing anything, identify what type of market environment we're in, and then choose the tools and strategies that are best served for that environment. And I think most people skip that step and go right to whatever magic indicator, they're used to or they invented or whatever, right? It doesn't work that way.
So where are you at on this whole interest rate debate? Transitory inflation? I mean,
I don't know what transitory means. I hear that word. I have no idea what that means. But what I will tell you is if inflation was actually here, bonds wouldn't be going up for the 4th straight month. Right? No. Bonds going up is the opposite of inflation. So I don't know who Powell is. I don't know what transitory. I can't speak to any of that stuff. What I can tell you is bonds going up for the 4th straight month and interest rates, particularly the U.S. 10-year yield below 1.4%, that there's nothing inflationary about that. Quite the opposite. Our long bond position has been working very, very well. Right? That's been a great trade. Fantastic trade. So these defensive areas, and you mentioned the dollar quick, Joel. As far as the dollar is concerned, it's been a great, very consistent, highly negatively correlated asset with risk. In other words, when the dollar peaked in late 2016, that's when we got that rally after the Trump election, right? When the dollar bottomed in early 2018, that's when stocks all over the world stopped going up, right? When the dollar peaked in March of last year, that's when stocks around the world bottomed. Well, guess what happened a few months ago? The dollar stopped going down. And what's been going on in the stock market? It's been a hot mess. So if you're interested, if you're interested in risk and risk appetite for equities or just risk in general around the globe, I think you got to follow the dollar because it's been so consistently, such a consistent high negatively correlated asset with risk. So if you are bullish stocks and you think stocks around the world are going to start going up now all of a sudden, you probably want to see the dollar rolling over, and that just hasn't happened yet.
I got two for you, JC. One, I want to read this comment from Clint Rhodes in the chat. He says, God bless you, JC. I have so much anxiety being so cash heavy. FOMO big time with all the all-time high news. So if you're really in all this cash, FOMO is hard, man, to be in cash when the S&P is making new highs every other day, right? So
most people can't handle the mental side of it. I mean, we have one of the greatest Olympians ever just decided that mentally she can't handle the competition, and that's in a sport and someone who's very successful. So just think about your average person like the rest of us that are just trying to execute a trade. You know what I mean? Like it's very difficult mentally. So I think that, being an athlete, as a baseball player myself, if baseball players fail 70% of the time, you get inducted into the Hall of Fame as one of the greatest ever. So, as a baseball player, failing consistently, I think taught me a lot of lessons early on and has helped me with the mental side of it. The whole FOMO, the revenge trading. I mean, I've every bias under the sun. I'm guilty of all of them. And the idea is to learn from those past experiences and not do it in the future. I've had that FOMO. You know what I don't have this cycle? I don't have any FOMO because I don't give a damn. I've been there. It's not worth it. Worry about yourself. Don't worry about what the journalist wrote on the headlines. Who gives a damn about what the journalist thinks?
Okay.
Right? What other people are doing is not my problem. It's not my problem. It's their freaking problem.
Okay, and then I know you like emerging markets, so I gotta ask you.
I don't like emerging markets. They're making
I should rephrase.
I like watching them go down.
Wait. I want to Wait. Historically, you've liked emerging markets in the past. I think that's fair.
No, it's been going down for a decade and a half. I haven't liked emerging markets in forever.
Okay, but you pay close attention to them. Maybe that's a better way of saying it. You like to follow the emerging markets closely. Maybe that's what I'll say. Okay, I want to get your thoughts on China here. How are you approaching this mess?
New 10-month lows, emerging markets, new 7-month lows yesterday. These are not uptrends, right? I mean, there's just nothing to do there.
Yeah.
Even the technology side, even the internet side, which is working in the United States, isn't working in China. So
yeah. All right. Is there anything that you do? Give us one thing you do like besides,
I told you I like treasury bonds. I like treasury bonds. I like heavy cash positions. We've been short financials. That's been working out really well. There's some individual names that are breaking out of bases, like things like DocuSign and McDonald's that have been working well. But like I said, it's few and far between. Very few stocks are working. Most stocks are not. So, I don't see any reason to force things. I mean, maybe I don't have the best tan right now, but for most of the summer, I've had a hell of a tan, man. I've been spending time at the beach with the family. Listen, I've been down this road before. There are times in the market to make money. There are times in the market to keep your money. I talk to traders every single day and they're all getting chopped up. I have been chopped up in markets just like this many times, right? So I just don't do that anymore. And that's just a lesson that you have to learn the hard way. And in my case, the hard way a few times.
Hey, I got one last one for you, JC. What I wanted to ask is, I don't know if you play too many options, but would you consider maybe more of like a straddle in this environment, something that you're not expecting to see so much up movement or down movement in the stocks? You've been saying that a lot of stocks have been moving kind of on the sideways trend. What do you think about something like that?
Collecting premium. Traders are getting chopped up and they're making donations to, premium collectors. So if you're on that side, that's been working, man. Like when I tell you, like our targets are hit because when we collect premium, as soon as half of that premium has dwindled down, we'll take all the profits. We're done, right? And these targets are being hit in a matter of days. Like traders are getting chopped up. And on the option side, you could really take advantage of that. And we have Sean McLaughlin. You guys should have him on our show. Man, when it comes to collecting options premium, I've never seen anybody do it better. The fact that we have a guy like that on our team that takes our research and then implements the option strategies according to implied volatility. I mean, he's like our secret weapon. And in this environment, man, has he been a home run. Have him on your show and pick his brain about that because he's been great. All
right. I'll send you an email later today. JC Parets is the founder of AllStarCharts. He is at AllStarCharts on Twitter. And Geico is a machine with it. Well, maybe not this summer because he's chilling at the beach instead of getting chopped up out there. But he's a charting machine. This guy, JC. Always a pleasure to talk to you. Thanks for coming on today.
Thanks, JC.
See you later, guys. Always a pleasure.
All right. 8:51. So, okay, takeaway from that is
that, there's nothing wrong with being on the sidelines a little bit, right?
Yeah.
I mean, and that's what he's saying. And he has this thesis, and the thing, and I think where people get in problems in these markets is they don't have a thesis. And my thesis for years is I can't beat the S&P 500. That's been my thesis. I can pick some stocks, I can get lucky with some things and move up and down, but I just know overall, I'm not like Dennis. He does the research, he looks at the balance sheets, he looks at the analyst ratings, but I can't beat the market. I mean, a lot of people can. A lot of people are stock pickers, but when it comes to it, and when I talk to young investors and stuff, I mean, everyone's at different points in their investing career. You're going to take your lumps like you did last month, but at least at this point, being in for the long haul, indexing, S&Ps, Kenny, when Kenny Glick comes on, right? He talks about the same thing. He likes to trade the individual stocks. But 8:52. Do we want to? We didn't even hit. Did we hit all the earnings things, or do we want to talk about more bad news from Intel?
More or less. The one thing I wanted to add with what you just said is, frankly, right now, if you are beating the mark, you're beating everybody else. If you're long SPY and the Qs, frankly, the
Qs are kicking butt. Yeah,
the only thing. If you just own those two, you're crushing most other people right now. It really is that simple. Now, is that a reflection of what's really going on out there? Well, as we've been saying, as JC just said, probably not. Most stocks aren't really moving in that same way. I saw some stat the other day about like the majority of stocks being below their 50-day average for some record percentage of stocks. But
I mean, look at a stock like 3M.
Yeah.
I mean, that didn't peak in February, right?
But
that peaked in
January
of 2018.
Sure. Well, yeah. So, but don't you remember back in February or like late January at least? Maybe we were distracted at the time by like the GameStop craziness, but like I do remember thinking like, man, like. And Tilray was like the Tilray went to $67 and in February 10th, and I was like, at the time I remember thinking like, oh my god, like everything is just ripping higher, everything is going higher. Why? I don't know, but like and JC's like what he said is absolutely right. Like at the time, of course we didn't know that many stocks were topping out, but like now we can see that clearly now in hindsight. And I just remember at the time just thinking like, wow, like, is everything going to just keep ripping? Because we had just come off the back half of last year, which was incredible, right? So, yeah. I mean, God, it's just...
the difference. The thing about last year was everyone sold on the way down, right? And they were looking to reaccumulate.
Yeah.
When it based but it just went straight back up pretty much. So the lot of the big that's the dynamic to set the tone for the rest of the year was okay. We got to get out. We had Fiery come on talking about 18,000. People are hiding under their desk. Big money sold on the way down, and then the computers they just flipped a switch, and the computers can move a hell of a lot faster, trade a lot smaller positions, do multiple things, and they bought it on the way up, and the big money didn't. So you spent the rest of the time, on the dips with the big money trying to redeploy their cash, and it just put an insatiable bid underneath the market. So
okay,
let's talk dynamic. A few more stocks.
Yeah, let's talk Intel here. They had their event last night, the Intel Accelerator, where basically they just like announced their new their roadmap for the next like several years as far as product releases and new chips and companies that they're working with. They named AWS, they named Qualcomm, but essentially just like they outlined the roadmap for the next like 3 to 4 years, as far as new chips are concerned. And I didn't see too many headlines about it. I didn't see too many people talking about it.
No, they didn't like it.
Yeah, clearly the top left chart tells you all you need to know. I think.
Yeah, pop and chop. Down. I think you're gonna find some buyers. Ooh, they got really whacked this thing. They took it down to 52.28. 52.32 low of the move. 52.76 was your low from yesterday. Not looking for this. I mean, if it goes green, then definitely that's going to be your resistance. 54.31. But you had buyers here on Friday. You had buyers in this area on Monday. You had buyers here on the dip last night. So I think it's just good. I think you might get a shot at it, but I just don't see this thing going, taking out the 42.28. Boom, or 42.32 going, or excuse me, 52.32. Just seems like the bids are stacked here. We'll see. Definite resistance at the close, and I'm not looking for any upside at all in Intel until it can clear that high from earnings day. That was 54.71. It even stopped shy there yesterday at 55.54. So TradeTheRange.com, 52.25, 54. Well, we use the close, 54.31, since that was close to the highs.
Let me just check real fast. See if we got through most of the earnings. Yeah, there's a couple small, like Raytheon. We didn't talk about the smaller ones. Not really super. All right, let's do some. We got 2 minutes here before Joel's gonna hop, and I'm gonna bring on my next guest. So we'll do ticker time in the chat. Drop them in. We'll take a look at a couple if we can. Let's go here. I've seen a couple of mentions. No, it's actually the same person mentioning Palantir, which we talked about.
Let's look at Palantir.
Talked about this yesterday, I think. Yeah.
Has it been participating in the rally? Let me take a quick look here. It had the big run up. Last time I looked, it's trying. It's trying. I would say we are going to keep it. Oh, you got three highs in the same area. It's right about halfway that move. So 2262, 2267, 22. It's trying. I'd say you get above this 2260. You got a little pop to 23. Nice double bottom if you're looking at it support at 2150. They need a contract. I know someone said in the chat that they go down when they get contracts, but I see them to go up. And then we looked at Penn yesterday, PENN, and boy, oh boy, I mean, triple top, three highs in the same area. Let's see if you can get a bid here and get above 73. You're actually getting a running start on it. You're only down 13 cents at 72.80. Pretty big range yesterday. But over 73, if you're looking for a scalp, your 4-day high was 73.43. If you're looking for more on that, closer to 75. But it's trying. Resistance is resistance, and still it's taken out.
All right, Joel's going to hop over to PreMarketPrep.com.
Yep. Okay, sounds good.
We'll see him at 3:30. See you, Joel.
All right. Bye-bye.
All right. Man, eventful morning. My phone's blown up about U.S. gymnastics. Apparently some drama there, but our show must go on. So let me bring on our next guest here, Michael Loukas, the principal and CEO of TrueMark Investments. New guest, new perspective. We always try to bring you new perspectives on this show. Mike, good morning. Thanks for joining us today.
Good morning. Thanks for having me.
All right. Let's start with this. You are, and TrueMark is an issuer of actively managed ETFs. That, not that it's ever quote unquote easy, but talk us about that environment right now, the actively managed environment right now, because you've got other active managers sprinting away from China at the moment, right? There's a lot of stuff out there. What is the environment for you right now?
Well, I think where we sit, we've got some good funds for the current environment. We've got one that's in AI and deep learning, which I would argue is probably, if you've got a secular growth portfolio, a good place to be in the face of inflation. We've also got an equity income fund, dividend growth fund that, from an active standpoint, has some significant advantages over the passive funds that are chasing down dividends and yield investors. So we feel pretty good about where we sit. Certainly I think the market's pretty fluid. We're going to see a lot in the next day or two. We're seeing China get beat up. We're seeing inflation here. Inflation, I wouldn't even say that. Inflation is here, but we're seeing, the market react differently to it depending on the week. So, I think active investing has some distinct advantages right now, depending on your asset class. And certainly over the past, 3 to 6 months, you've seen the ability to switch back and forth from that quote unquote great rotation that lasted a month and a half. After waiting 10 years.
For 10 years, right?
Right.
Yeah.
So, I think being the ability to stay on your toes and the ability to really focus on quality and secular growth names within concentrated portfolios has really boded well for us.
Yeah. The value was winning, but if you blinked, you missed it. Unfortunately,
that was a quick train.
Yeah,
real quick train.
Okay. Wait. So you mentioned inflation, so let's talk about that. Not so much about going forward and whether it's here or transitory. We don't really care. I don't really care about that. I care about positioning for it. Right.
Mm-hmm.
So you've got a fund that is an inflation hedging instrument. Explain exactly how that works, and generally speaking, how investors or traders can hedge for inflation.
Well, look, there's a couple of different ways you can attack it depending on what your goal is. And when we say inflation hedge, we're talking about the asset class, and there's not a particular mechanic in it that hedges out inflation, but the idea that, look, you have chances to be in asset classes that are better prepared to handle inflation or an increasing rate environment, which may be the result of inflation. We're yet to see on that. So when we look at the secular growth example, the secular growth argument for this, and I think it was Howard Marks said in the last 5 or 6 months, he said, it just may be possible the best hedge against inflation is secular growth. And so when we see that great rotation, we see everybody run from growth, wholesale, and shift into yield, shift into value. But, to use an old phrase, it's throwing the baby out with the bathwater. So when you look at secular growth, you look at these companies that have accelerated into the pandemic, through the pandemic, and now outside as we evolve out of the pandemic, their fundamentals are still accelerating. They're still growing. So we're in a low rate environment, right? We've been in a low rate environment for a long time. If we've got inflation, and even if the Fed moves, we're not going to be in a high rate environment. We're still going to be in a moderately low rate environment, relatively low rate environment historically. So you're going to need growth to help offset that inflation. And for us, some of that secular growth really resides in tech still. And, if we look at what the equity markets have done over the past 10 years, the bulk of that growth, that performance has been concentrated in FANG. And so, where is the next FANG? Where are we looking for the next household names, the next tech segments that are defensive? So I don't look much farther than things like cybersecurity, right? Whether you're working from home, whether you're working in the office, whether you're just surfing on your iPhone. I think, there was some malware on the iPhones recently. Cybersecurity is not going away. The shift to a digital economy is not going away. And you see the fundamentals accelerate for all these companies right on through when you see the Zscalers and the CrowdStrikes and the Oktas, and Sentinel now. So you've got some names in that segment that I think are going to be pretty strong through, usually takes a quarter or two of earnings to show which stories are secular and which stories are just that, story stocks. And so we're starting to see the dust settle on some of these after the rotation and realize what's secular and what isn't. I mean, you'll see it in a couple of names that we really like are Unity and Roblox. The transition to AI and VR and AR and 3D, that's real, and it's not just in gaming. This is transitioning into medical and construction and lots of places that are going to be a very fertile market for it. So again, it takes a quarter or two, and as you see these secular stories start to stretch their legs, they'll differentiate themselves from the other tech growth stories, and they're places to be in the face of inflation, because you're going to need that growth. There aren't too many yield instruments that are going to bump you up enough to account for a rise in rates or a nice spike in inflation, whether it be transitory or not.
But right? you can understand why somebody would look at a Roblox or a Unity and roll their eyes, because they're like, really? I just got flossed in these two, right? I mean, tech had this ridiculous run, and then it rotated away from the money, came out a little bit, and now we're sort of just, at least in Unity, going sideways for a while here. But like, somebody could just look at this and just, oh, I already got hosed here. You know what I mean? Like, why would I want it again?
Yeah, because they got hosed by the rotation, right? And the rotation, I think we all agree, is sort of ended, or completed itself, and it was mostly model driven anyway. So what you've essentially got here is you've got to take one or two, at most, sort of 3 earnings cycles, and these secular growth stories prove out. Okay, when you see the fundamentals and the earnings accelerate. I mean, last quarter, I think we had over 90% of the portfolio beat on sales, right? Almost 90%, like 87% beat on EPS. So when you start to see these stories accelerate, investors start to realize that these trends, they're not just pandemic-driven trends, right? They're not lockdown-driven trends. They're not work-from-home-driven trends. They're trends that existed prior to the lockdown. The lockdown accelerated them, and now they're going to come out. We're going to see the same thing as they report. They come through earnings cycle here in the next, call it handful of weeks, as they all come in and report. You're going to see additional increase in guidance. You're going to see additional beats. You'll start to see these stories lengthen out. So you may look at it and say, I got beaten up, but at the same time, you've got to realize, yeah, I got beaten up by bad timing. I got beaten up because the first couple of months of Q1 were a model-driven rotation to a large degree. We're done with that. And I think as this starts to stretch out, sideways isn't a bad place to buy when the air's been out a little bit. And as these earnings cycles work through, we're going to see that come to fruition.
I just pulled up a couple of your funds, the LRNZ and the DIVZ. The LRNZ is your AI and deep learning, and your DIVZ is your low vol. Well, it's in the name, right? Div, right? Low vol equity income, right? Dividend. And I know you have a couple more funds. You have an ESG fund. I guess, like, looking forward to looking out the rest of this year, the back half of this year. So, you're talking about this rotation taking a couple of earnings cycles, but you believe growth will come back, and sideways is not the worst time to buy, which is basically what we've seen. We were talking to our last guest, though, just about the fact that the S&Ps and the NASDAQ are every other day is a new high, and the rest of the market does not reflect that. And our last guest was talking about his cash position. It's chop, 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 right? And he's trying to the best way to avoid that chop, he said, is just stay in cash. So how do you think about that right now?
Well, why is chop such a bad thing unless you're trading on a daily basis? So staying in cash, sure, cash is safe. If we are, I mean, look, we've gotten gas or groceries or whatever reason. Inflation is here. Whether they raise rates or not, you're not going to beat inflation sitting in cash. So tactical management's really hard. Okay, really hard. And the people that get it right, congratulations to them. Been in the market long enough to realize that tactical management is a tough road to hoe. It's always tough to time the market. So when you're timing it, to me, it's not going to cash. It's moving into secular growth. Or if you look at DivZ, for example, right, you're moving into equities that are showing dividend growth. I mean, like banks and money centers have massive cash positions right now, right? They're looking for a reason to come out and increase those dividend yields. You've got Morgan Stanley already increased its dividend 100% year over year. That's not going to be an uncommon scenario. Big Pharma is the same way. There are lots of names out there that are healthy, and it's important that you get in and dig into those fundamentals, understand where over-leveraged balance sheets reside, understand where large, healthy, free cash flow resides. And I think DivZ, as a concentrated fund, I mean, we're talking about 25 to 35 names here. You have things like Cisco, right? No one in the day thought of Cisco as a great dividend-paying stock. But Cisco has done just fine for the past 20 years, has a nice dividend, and they're going to benefit no matter whether or not people are working from home. They're going to benefit more if people are split between working home and working in the office, the hybrid model. So there are great names out there that are worth being in, whether your idea is simply growth or your idea is growth and income. And I've never believed in going to cash. I mean, unless you have some signal that tells you the world's about to end. The reality is that historical precedents, and we see a lot of technical analysis these days, historical precedents, they're jumping ship a bit, right? I mean, we're decoupling from historical precedents because we've never been in a low rate environment this long, right? We've never seen a world that has more access to instantaneous information and more access to trading. And we've never seen an equity market that's more addicted to growth. I mean, that 10-year wait for the value rotation lasted a month and a half to 2 months, right? And now we're back. And whether it be crypto, whether it be different secular trends in tech, or investing for dividend and growth, I mean, the reality is that we're always going to come back to growth because the market's built that way now. And we could argue for different reasons why it's built that way now, but when you look at the two biggest wealth generators in the world, it's real estate and equities.
All right, so one more for you, Mike. You like growth, but how do you separate the good growth from the bad growth? Because everything that was growth was ripping, into January and February, right? And so you singled out Roblox and Unity. Why? What is so special about those two? And cybersecurity, which I don't even know if I would call growth, really. What's so special about those, and how do you separate the good growth and the bad growth? There's a lot of bad growth out there.
Yeah, I mean, you've got to look at a couple of things. I mean, if I really had to distill it down, I would say it lands in sort of three silos that you've got to take a look at. First is fundamentals acceleration, right? So if you're seeing earnings, revenue growth, sales growth, those are important growth stories. Your earnings, we know that particularly in tech, earnings can be hit or miss in terms of the actual underlying growth story because they're spending into that growth. Now, when you talk about revenue and sales, you're talking about customer adoption. Okay, so customer adoption is huge. And then you got to look at the runway. So with customer adoption, what people don't really get is the cost of switching, right? So switching cost means that in tech, when a company implements a certain technology, there's like an ecosystem that grows up around it. And for them to switch out of that technology, there's cost. And there are moving parts in that they don't want to jump into lightly. So when you see a lot of these SaaS providers, get into certain firms, they're going to be there for a while. So customer adoption is a huge signal as to whether or not that trend is going to continue or that company is going to become a secular company. And then we've got to realize that like secular growth, particularly in tech, that may be the new defensive play. No, but I'll debate all day long. No one can say that we're not migrating to a more tech-heavy or more digital-heavy society in global economy. That comes with it a wave that is going to affect a lot of tech segments. And so, I say again, when people say, "Well, why do you think Okta is a category killer?" I'm like, "Well, when's the last time you tried to get into your phone or your bank account or your computer?" I mean, all this account authentication is running basically through Okta, right? So there are plenty of stories out there that we use every day, and we've got to realize that those aren't just, those aren't momentary trends. Those are long-term trends, and they're going to keep accelerating. So you look for that customer adoption, look for the runway. Unity, with Roblox and Unity basically split the 3D gaming market 50-50, right? Two different ways to attack it. Now, Roblox in the near term probably is going to have a higher sales stream, a higher revenue stream, or growth at least. Unity in the long term, Unity is breaking into medical, it's breaking into construction. I mean, think about the uses for 3D, AR, VR, and cost savings and efficacy of different build outs. So, when you think about trends like that, I mean, you look at Path, look at UiPath. Path has launched, a way for people that are unsophisticated when it comes to coding to, run automations that it's going to essentially change the application of AI for the common user. And right now it's just sort of swimming out there on the fringe and no one's really talking about it. But these are trends that are game changers. And so these are the types of markets you can find those and go after those and understand that those stories are accelerating. And then from an active management standpoint, we have the ability to hunt these down and chase them. And, I think concentrated portfolios of good secular growth stories are going to be a fantastic hedge against inflation once the dust settles.
Michael Loukas is the principal and CEO of TrueMark Investments. They got several actively managed ETFs. Different perspective than our last guest, and we appreciate that, Michael. Thanks for the time today.
Thank you. Appreciate it.
All right. It is 9:16. Here's what we're going to do. I mentioned this yesterday. David Green is out this week doing his boot camp. So here's what we're going to do. We're going to end this stream. We're going to do live trading with the Benzinga gang into the open. We got Mitch Hodge, Ryan Faluna, Zunaid Suleiman. I'll be there as well. And that's what we'll do for the next hour or so, till about 10:30 Eastern time. So I'm going to hop off on this stream. This stream will end. It will redirect to the live trading stream, which I don't know, it should have already started by now, or they're about to start. So with that being said, thanks to both my guests today, Michael Loukas and JC Parets. Thanks to all of you in our chats. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Smash the like button, please, and thank you. I would appreciate that. And let me just, before I end, let me just make sure that they are live so I can end into them, because this stream will redirect. Looks like they're going live in a moment. All right, I'm going to end this stream. Live trading with Benzinga starting right now. With the whole gang, and that basically just everyone comes to it with their own ideas for the morning, and you can just trade with us and watch us walk these setups and find stuff in Benzinga Pro to trade. All right, everyone, have a good rest of your day. Good luck at the open. See you on the next stream.